The next story that we're going to talk about is Roku. This is big news. So this segment that I'm going to do right now, and Joey's going to probably put up a nice little caption when he does the video. This little section that I'm going to call right now is called the Stream War. Dun, dun, dun. And we all know that Netflix is still the leader in that realm of streaming. But as we looked at the news last week, Disney is ramping up. Going after Netflix. Now, another thing that just happened, Roku is up 3.2% as Apple TV app is now going to be on the Roku box. How cool is that? Now, there's another stock in here that I did not put into the watch list, which is probably going to be Amazon Prime. That's another one that's in the space. But if we look at Roku, Roku has offered the boxes that have, like Netflix and all of the other streaming platforms all in one place. I, on the other hand, I have the Fire Stick. And with the Fire Stick, I have access to all of, the Hulu, the Netflix, the Amazon, all of that kind of thing. You still have to have a subscription to these things, but what you're now getting caught up in is the ability to stream. So Roku was up because Apple TV was now going to be on the Roku box. This is the first outside of Apple TV, the first streaming service that will now offer Apple TV. That's very interesting. Always keep in mind, even with all of the Apple devices that I have, Apple is very particular about who does what with their stuff. Remember, even in the apps, Apple has a lot of hand-holding that goes in with the apps that go into their Apple store, whereas on the other devices, who are they? The Droid devices, anybody can put an app on there. A lot of times it's hit and miss whether the apps are good or not. So that is one thing that keeps me with Apple, is that their apps are very heavily watched over. And now putting Apple TV on Roku is probably going to be huge. Apple TV's app is available starting today. On November 1st, Apple's TV Plus will be available through the app in supported regions. Along with the US, Apple's TV app is available to Roku users in Argentina, Canada, Chile, Colombia, Costa Rica, El Salvador, France, Guatemala, Honduras, Mexico, Nicaragua, Panama, Peru, Republic of Ireland, and the United Kingdom. That's going to be huge for the Apple product to be put onto the Apple TV being used all over the place, but the Apple TV app to be used in Roku. Now, also a part of this, who's the big leader in this industry? Netflix. So in here, in the same realm of the stream war, Netflix comes out and says, competition is okay in a growing streaming pie. So what Netflix is doing as the leader is pushing off, saying, let these people come aboard. All right, let these people come aboard. We still have the market share. Come on. There's a lot of pie out there. You guys can get a bigger piece of the pie because they're going to be moving on up, right, Joey? Mm-hmm. They're going to be moving on up to the east side, to a deluxe apartment in the sky. Anyway, Netflix is up 8% now in the post market, and this was as of yesterday, trading after its quarter 3 earnings. So earnings not only are they saying bring on the others. They blew earnings out of the water, all right, which was great. With the streaming wars, the same thing I'm saying, in its early days, it could be another indication that consistently new high-profile content will trump library offerings. Woo, that's interesting. So looks like Netflix is going to try to step up their game as far as content, right? But the problem is with Netflix is they keep bleeding subscribers, but how about they netted 6.77 million versus last quarter? That's a huge jump. All of these things, if you're not in Netflix, this is the kind of information that's going to help you to determine, hey, maybe Netflix might be a good play right now. Now, who else is getting into this stream war? Remember Disney? We talked about Disney last week. Why Disney is a better long-term buy than Netflix. So this article lays out, why should you be in Disney than going to Netflix? Well, Disney will be a real threat to Netflix with the vault of content they have at their exposure. There's no one that can get past that. Disney has got a lot of money. They've been around a long time, and they've got a lot of content. Now, Netflix is saying, come on, Disney, you can come on in, you can get a piece of the pie. I think Disney is getting ready to say, we're about to take your pie and eat it and then spit out and give you the crumbs. Disney is thinking about trying to really bogart this industry, and they probably can with the amount of content that they have. Think about it. With all of that information, you would love to be watching Disney, wouldn't you? You probably would. Netflix is set to lose some of their most watched content. Friends, you know something? Friends being, what's the word that they use after it goes off of the air? What's the word that they use? Somebody's going to type it in the room. So once the show goes off of the air and other people are showing it, there's a word for that. Somebody type it in the room. Gosh darn it, I can't believe I don't know that word. It is escaping me right now. Somebody will type it. They're losing The Office. Syndication, thank you, Paul. You couldn't help me, Joey. That's, oh my gosh, that is, not reruns, Jay. Syndication. Friends is probably making more money in syndication than it did even as the popular show it was, which is awesome because those actors are reaping in the money. But they're losing The Office, and they're losing all of the Disney-related content. Disney is pulling it from Netflix. They are definitely going after Netflix. Our Disney Studios segment continues to outperform, setting new industry records for the global box office. So let's talk about all three of those stocks, Roku, Netflix, and Disney. I'm going to go back into the software. And let's go back into my watch list that I've created. So, Disney, Netflix. Let's look at Apple as well. Apple and Roku. If I had to choose between what streaming data I wanted to look at, let's let VectorVest help me analyze which one I want. Notice that we use our indicators, RV, RS, RT, VST. All of these indicators are cast on a scale between 0 and 2. RV looks at the stock's long-term price appreciation potential. Relative safety is an indicator of risk. Relative safety looks at the company's financials. Do these companies meet or exceed earnings expectations year over year, quarter over quarter? RT is a technical indicator. RT looks at the short-term price trend of the stock. Is it in an uptrend or not? Above the value of 1 in an uptrend, below the value of 1 not in an uptrend or in a downtrend. And remember, because all of these indicators are cast on a scale between 0 and 2, if the indicator is above 1, it's favorable. If it's below 1, it's unfavorable. Let's start off with Apple. The stock is it's fairly valued, all right? We do assign a value to every stock in our database. It's what we feel the stock is worth, and we can look at price and value to determine whether the stock is trading above its value or below. Is it overvalued or not? We want you in safe, undervalued stocks. Upside potential? Apple doesn't really have it. As compared to a AAA corporate bond, I would rather own a bond over the next 1-3 years than an Apple. Relative safety. This is a good safe stock though. Apple's got a lot of money in their coffers. So they're a safe company that tends to most likely meet or exceed earnings expectations. RT tells me the stock is in an uptrend right now. Netflix, way over its value. People are willing to pay a premium to own Netflix. Upside potential, favorable. Safety, favorable. RT tells me that right now Netflix is pretty much moving sideways. The VST, which looks at all three indicators wrapped up into one, is above 1. Same thing with Apple. Disney, overvalued. People are willing to pay a premium to own Disney. Wow, the upside potential is even worse than it is for Apple. So even though Disney is trying to get into this space, its upside potential is not there yet. But it is a safe stock. Why? Because Disney is a company that's been around quite some time, and it's got a lot of money in its coffers as well. This is the safest stock out of the 4 that I have highlighted. RT tells me the stock is still in a downtrend right now. It is ramping up to go after Netflix. And the last one, Roku, way over its value. Now, let's talk a little bit about Roku. The move with Apple being now put on the Roku box could bump it up. The stock does not have good upside potential. All right. The stock is not altogether a safe stock. With the news with Apple bumping on board, did drive the stock's price a little higher. The stock is a hold. Now, when I'm looking at these stocks, Roku does not make money. They do not grow their monies positively. Now, Disney does make money. Earnings per share, they do make money, but they're having a hard time right now growing it. They're growing it in a negative way. Netflix, on the other hand, the leader, growing their earnings at a clip of 26% a year. Now, we've analyzed them. Let's go view the stock graph. Let's go look at all four of them. Disney, look at that move. So Disney making money, but look at the earnings per share falling down. Earnings is the engine that drives the stock's price higher. Look at Disney. So this move with Disney telling people, we're coming after you, all right, they're going to put the weight of the company behind them to help to drive the stock's price higher. Going after Netflix, and if they can overcome Netflix, you could be getting into Disney at a good low rate. Watch earnings though. The next stock, looking at Netflix, this is the leader. Remember, it was bleeding subscribers. Now they're starting to pick up subscribers again. The price is above the 20-day moving average. Look at the earnings though. Netflix, by far, if I'm looking at a streaming data, look at a stream, look at the earnings. You can't beat that. Now, again, subscribers will hurt them if they're losing them. But now, as you saw in the earnings, it bumped up from 6.7 million, better than it was 2.7 million they picked up last year. They were on the rise once again, and look at the volume behind the move. Let's go to the next one. Apple, a good, strong company. How about streaming is just a portion of what Apple is even all about? All right, so they're trying to get into that field a little stronger, but look at the stock. It's a good, solid stock. Watch the earnings on Apple, though, but I love the price activity. And the last one is Roku. Roku, a company that's not making money. The move with Apple could turn them around, and could this be a good early entry to start taking out that last swing high? It could be. Look at the candles. Definitely moving higher, above the 20-day moving average, and the earnings are getting less worse. All right, let's see what you're talking about real quick. Getting Roku TV tonight, says Rich. I'm telling you, Roku, now with the addition of the Apple TV on that box, is going to make a big difference. And guess what? This kind of information may get you in early on something like a Roku trade, folks. Jay says Disney is also more diversified than the others. Again, they've got a lot in their vaults as far as content. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.